For over a decade, if a Canadian province wanted to raise a few $billions on the bond market, an American bank was practically guaranteed to be standing in that room. That streak just broke. Ontario just completed a U.S. dollar bond sale without a single American bank involved in it, the first time that's happened since 2011. Alberta did almost the exact same thing months earlier, skipping Bank of America for the first time in 6 years. And JPMorgan's own CEO Jamie Dimon has publicly admitted his firm has already lost bond deals because of the tariff uncertainty Trump created. Wall Street isn't just losing a trade war, it's quietly losing its seat at the table on Canadian government debt. And the numbers behind this shift are only getting bigger. Here's what we're covering. First, we'll break down exactly what happened with Ontario's bond sale, the banks involved, and why this specific detail matters so much to anyone watching North American finance. Then we'll get into Alberta's almost identical move and what its own finance ministry said and didn't say about why it happened. After that, we'll cover Jamie Dimon's own admission about lost deals, straight from JPMorgan's leadership, not a rumor. We'll look at the bigger structural shift happening and how Ontario funds itself, including brand new bond programs it's never used before. And finally, we'll talk honestly about what officials actually claim is happening here, because this story only works if we get the nuance right. Let's start with Ontario, because the Globe and Mail broke this story with real numbers attached. The province sold $2 billion worth of 10-year bonds, and for the first time since 2011, no American bank was part of that deal. Instead, Ontario turned to British banking giant Barclays, alongside 3 Canadian institutions, BMO Capital Markets, CIBC, and Bank of Nova Scotia. Just months earlier, in January, Ontario had sold $3 billion in 5-year bonds with help from Bank of America. So this wasn't a province with no relationship to American banks. This was a province that had one, and then very publicly moved on from it. And it wasn't a one-off either. In March, Ontario went even further, selling $1.95 billion worth of 10-year euro-denominated bonds using Barclays alongside RBC Capital Markets and TD Securities, once again with 0 American banks in the syndicate. Alberta's story runs almost parallel. The province issued a $1.4 billion bond in April without any involvement from Bank of America, a bank Alberta had regularly used for its foreign currency debt sales for 6 straight years. Then, like Ontario, Alberta also turned to Barclays for a $1.25 billion Eurobond, again pairing the British bank with Canadian players RBC and TD. 2 of Canada's largest provinces months apart, both quietly walking away from the exact same American institutions they'd relied on for years, right as Trump was reviving Section 232 tariffs and labeling Canadian steel and auto parts a national security risk. And here's the part that moves this from a Canadian talking point to something Wall Street itself is admitting. JPMorgan CEO Jamie Dimon said in April that his firm had already lost, in his own words, a couple of bond deals tied directly to the uncertainty around tariffs, though he stopped short of naming which ones. Think about what it means for the head of America's largest bank to publicly confirm, unprompted, that trade policy coming out of his own government is costing his firm actual underwriting business. That's not spin from a Canadian finance ministry, that's an admission from the very top of Wall Street. Now, to be completely fair here, because this story deserves honesty rather than pure spectacle, provincial officials have consistently pushed back against the idea that any of this reflects a formal, deliberate ban. Alberta's finance ministry spokesperson explicitly said the change with Bank of America was not intentional. Ontario's finance ministry said flatly there is no blanket ban on U.S.-based financial institutions, describing it instead as the province continuously monitoring and assessing the performance of the service providers employed for its funding activities. That matters, and a fair breakdown has to include it. But it's also worth noting Doug Ford had previously and publicly committed to banning American companies from Ontario government contracts entirely in response to the trade war, so even if this specific bond decision wasn't an explicit directive, it's landing in a political environment where provincial leaders have openly discussed exactly that kind of move. Here's where this becomes more than just a couple of bond deals, though. It's part of a much bigger structural shift in how Ontario funds itself. According to the province's own 2026 budget documents, domestic Canadian dollar borrowing made up only 59% of Ontario's long-term borrowing for the 2025 to 2026 fiscal year, below the province's own guidance range of 65 to 80% domestic funding. Increased foreign demand and favorable international market conditions allowed for more foreign issuance than planned, and for the first time ever, Ontario issued euro-denominated 30-year bonds this year, raising $600 million at lower costs than borrowing domestically. Ontario's own documents describe this explicitly as further diversifying its investor base while ensuring reliable access to capital away from the domestic market, language that reads very differently once you know it's happening in the same year. American banks got quietly dropped from major bond syndicates. Zoom out, and the pattern becomes clear even without needing a conspiracy to explain it. Ontario alone is planning to borrow nearly $60 billion this fiscal year to cover its budget deficit, with up to 30%, roughly $13 billion, expected to come from foreign markets. Every one of those foreign deals is now a decision point. Does an American bank get a seat at the table, or does a European or Canadian one instead? Given everything else happening in this trade relationship, tariffs, threatened annexation rhetoric, and provinces that have openly floated banning American companies from public contracts, it would honestly be more surprising if American banks weren't gradually losing ground in this specific market. So that's the full picture: no official blanket ban, no government press release announcing a boycott, but two of Canada's biggest provinces quietly walking away from decades-long American banking relationships, a JPMorgan CEO admitting his own firm is losing business over the tariff fight, and provincial borrowing programs increasingly built around Euro and British capital instead of Wall Street.
It's worth sitting with why this particular shift matters more than a typical trade headline. Bond underwriting isn't a one-time transaction. It's a relationship banks fight hard to keep, because it comes with fees, future business, and a foothold inside a government's entire financial ecosystem. Losing that foothold isn't like losing a single order of steel or aluminum. It's losing a recurring seat at the table every single time that province needs to borrow money, for years, potentially decades. That's exactly why Jamie Dimon felt compelled to mention it publicly in the first place. Banks don't usually advertise losing business unless the pattern is significant enough that staying quiet would look worse. And every additional $1 billion Ontario and Alberta route through Barclays, RBC, or TD instead is $1 billion of future fees, relationships, and influence that used to belong to Wall Street, quietly shifting somewhere else. Whether or not anyone in Ottawa or Toronto ever calls it a freeze-out officially, the money is already voting with its feet. If you found this breakdown useful, hit like and subscribe, and let me know in the comments, do you think American banks ever win back this ground? Or is this diversification here to stay for good?